Dear friends, welcome to weekly view on markets. This week was very bad for Indian markets and also for all global markets. Markets were hit by Trump tariffs during this week. Indian markets corrected more than 2.5% along with all global markets. Uncertainty about global trade, inflation fears due to high tariffs, decline in GDP growth of countries weighed heavily on the markets. These are all the fallout of the tariff war started by Trump. Markets are nervous as economists are working out the impact of disruption in global trade and other consequences. Markets will trade with negative bias and some more correction is in the offing. Swift recovery may not happen as it is very difficult to assess the impact of the trade war started by US till the impact becomes clear and clarity emerges about the tariffs imposed on different countries and what is going to happen to the global trade. When there is a clarity on all these things, then only market will take a direction. Investors need to be patient and this will also settle down like many other global events. We have seen many global events like COVID, then after that Ukraine war, after that Israel-Hamas conflict, and now latest is the tariff war. So one after the other, some of the other these kind of events will be coming. So investors should have their patience. We will definitely see through all such events. We have uh, faced many such events in the earlier, and markets always perform in the long run. So investors need to have patience. They should not unduly get worried. Indian economy is in good condition, and India is not highly impacted by reciprocal tariff like many other countries. Mutual fund investors should continue their SIPs. If the market falls, they will get more number of units because the NAV will be less. And when the market goes up, they will be accumulating units at lower levels, which will help them to make better returns in the long run. So mutual fund investors should continue their SIPs. Let us look at uh, performance of indices during this week. Nifty closed at 22,904. It dropped below 23,000 level. It lost 615 points, that is 2.61%. Bank Nifty relatively outperformed. It lost only 62 points, that is 0.12%, closed at 51,502. Still, despite the overall negative sentiment, Bank Nifty has managed to stay above 51,000, which is good. It shows the strength of underlying financial companies in India. Mid cap index lost 1,026 points, that is 1.99%, closed at 50,645. Small cap index lost 419 points, that is 2.61%, closed at 15,675. India, which has surged more than 8%, that means a kind of fear has gripped the markets. It is at India VIX is at 13.75. Now let us look at sectoral performances. Most of the sector lost out except media, FMCG, PSU banks all managed to hold on with small gains. They ended in green. Remaining all sectors heavily lost. Due to high tariff, US market is likely to go into a recession. That is what is a prediction by many economists. Because of that, the information technology stocks, which have huge business in US, have corrected more than 9%. Metals have corrected by more than 7%, manufacturing corrected by more than 4%, oil and gas, energy sector, commodities, reality all lost more than 3%. Auto index lost 3.3%. Pharma, infrastructure, consumer durables, public sector companies all lost between 2 to 3%. Other sectors are also ended with ended in red with small losses. Now let us look at technical charts. This is the daily chart of Nifty. If we can see, market went up to 23,750, and from there it has given correction, and now it is at the support level of 22,900, and um, from here, if the market falls, the next support should be at around 22,500, and if it falls from there, the previous low, that is 22,000, seems to be a good support. Whether this support will hold, we'll have to wait and watch. Because of the global developments, there is a panic that is set in the markets. So we'll have to wait and watch in the next week. This is the stock of Nifty Mid Cap Index. Mid Cap Index is also at the support level of 51,000, and it has slightly closed below the support level, and next support level for Nifty will be at around 48,000. Nifty for Nifty Mid Cap Index. The support level will be 48,000, and the previous low was 47,250 levels. We'll have to wait and watch whether it will touch the previous low. This is a chart of Nifty Small Cap Index. Small Cap Index has broken this crucial support line. It has closed below this. The next level of support for Nifty Small Cap Index is at around 15,000. If that also breaks, then the previous low is around 14,500. So we'll have to wait for next week. This is a chart of Bank Nifty Index. Relatively, Bank Nifty Index has shown good support, or it has shown uh, strength, and it has not broken out of this range of 52,000 on the higher side and 51,000 on the lower side. So Bank Nifty may hold on to these level of 51,000, and it may provide leadership to the markets in the coming week. Also, there is a RBI Monetary Policy Committee meeting, and a rate cut is expected. So if the rate cut happens, that will be giving a further boost to the financial sector. So we'll have to wait, and Bank Nifty may show strength in the coming week also. Now let us look at some of the fundamental factors of the market. Macroeconomic parameters of Indian market continues to be stable. RBI foreign exchange results is at 665.39 billion US dollars. It has gone up by 6.6 billion dollars. Foreign exchange rate is at 85.23. After touching almost 88 levels, the rupee has strengthened and it is at 85.23. The reason is the decline in the dollar demand worldwide. The dollar index from around 109 level, now it has closed at 102.51 because of drop in the dollar index and the demand for dollars globally. UPI has also strengthened. Then crude price is at $65.58 per barrel. Crude prices dropping below 70 is a surprise because of the trade tariff. The economists feel that it will impact the global growth, and when the global growth is impacted, there will be lesser demand for oil, and that is pushing the oil prices down. The lower oil prices is definitely good for Indian economy, but if the overall global economic growth reduces, that will also have a negative impact on India. Gold has surged because of the uncertainties. Whenever there is a economic uncertainty, the gold prices surge. Gold is trading above 90,000 for 10 grams 24 carat. It has closed at 90,660. FIIs have sold a small quantity of 1,927 crore during this week. BIIs have bought 5,633 crore in equity. So if FII stop selling, their selling has come down, and in previous week they have bought. This week they have sold a small quantity. So if FII money is coming to India, that will help the market to stabilize. And continued DII selling is giving support to the markets. GST collection for month of March has come at 1.98 lakh crores, and GST collection has gone up by around 7% year on year. Higher GST collection indicates that industrial and services activity is quite good. So that is why I say the Indian macroeconomic parameters are good. Auto sales for March 25 have gone up by single digit. They have grown by single digit, but auto sector was hit by 25% tariff by US. Those companies like Tata Motors, Tata Elxsi, and many other auto part component companies who export to US have been hit by tariff. PMI manufacturing and services index has come at 58.9 for the month of March, which indicates growth in the economy. Despite all these hurdles, Indian growth is quite stable as indicated by PMI index. So it is at 58.9. So if it is above 50, it shows that economy is in the growth phase. 58.9 is a very good number, and which indicates that Indian economy is still doing very well. So investors should not get panicked. Tariff announcement from US President has sent markets tumbling this week. All global markets went down by 3 to 5%, and India is no exception. Indian markets have already corrected from September 2024. That is why right now, I don't expect too much fall in the Indian markets. There could be a fall of 3 to 5%, while the other markets are falling more than 5 to 8%. Indian markets are likely to fall only 3 to 5%. Charts have corrected from the resistance level. We have seen previous week they were at the resistance level. From there they have corrected, and technically the charts look weak, indicating further downside in the near term. RBI policy meeting is there on 7th April. A rate cut is expected, but looking at the new development of this trade war, what RBI will do, we'll have to wait and watch. If RBI cuts rate by 25 to 50 basis points, our markets will see a big rally. Market is likely to remain volatile with downward bias due to global factors. Until some clarity emerges on US tariff, this market indecision and downward bias may continue for some time. But this is not too much negative for the long-term investors. They should not get panic. We have seen many instances, global developments, many crises, who Indian markets have taken all such events along with them and always have gone higher. So investors should have faith in Indian democracy and Indian economy and the India growth story. Mutual fund investors and long-term investors should remain invested, and they should continue their SIP investments, and the intermediate correction benefits SIP investors. They should remain invested. I am very confident that in the long term, definitely the investors in Indian markets will make good returns. This is all for this week. If you like my video, please subscribe to my channel. You can refer to your friends. You can ask your questions. We will meet again next week. Thank you.